Before you ever place a trade, before you even think about hitting that buy or sell button, you need to understand that there is a skill that separates the professionals from other traders. That skill is analysis. Most beginners treat the market like a casino. They guess, they follow vibes, and eventually they lose. But professional traders don't trade opinions, they trade information. Today, I'm breaking down the 4 pillars of market analysis: fundamental, sentimental, technical, and intermarket. By the end of this video, you'll know exactly how to read the market like a pro. So, what is analysis? Simply put, it's the process of breaking down information to make a smart, calculated decision instead of an emotional guess. Think of it this way. Guessing is random. Analysis is intentional. You aren't predicting the future. Nobody can do that. You are increasing your probability. You're looking for a high-conviction setup. Let's look at the first way we do that. Fundamental analysis answers the most important question: why is the market moving? Markets move because economies change. If a country's economy is booming, its currency gets stronger. If there's high inflation or unemployment, it weakens. To do this, traders study the Big Five: interest rates, the most powerful mover; inflation, CPI data; GDP, economic growth; employment reports, like the NFP; and central bank speeches. To perform fundamental analysis, you don't need a degree in economics. Just open a site like Forex Factory. Look for the high-impact news events, usually marked in red. Compare the forecast versus the actual result. If the news is much better than expected, expect that currency to fly. Next is sentimental analysis. This answers how are traders feeling right now. The market is driven by 2 primary human emotions: fear and greed. Sentimental analysis tracks the positioning of the crowd. Here's the secret. When everyone is doing the same thing, the market is often about to reverse. If 90% of retail traders are buying a pair, professional smart money is often looking for a reason to sell. Use tools like the IG Client Sentiment or MyFX Book to see these ratios. Use sentiment as a confirmation, not a standalone signal. Now we get to the most popular one: technical analysis. This answers what is price doing right now. Technical traders believe that price reflects all known information. They don't care about the news, they care about the chart. You're looking for patterns. The essentials include trend identification. Are we making higher highs? Support and resistance. Where did the price bounce before? And indicators like RSI for overbought or oversold, or moving averages. Technical analysis is your timing tool. It helps you find the exact entry price and where to put your stop loss. Finally, we have intermarket analysis. This answers what other markets are affecting this one. No market exists in a vacuum. Everything is connected. If the US dollar gets stronger, gold usually drops. If oil prices go up, the Canadian dollar often strengthens. If bond yields rise, the stock market might feel pressure. Before you trade a specific pair, look at its cousins. If you're buying the euro, but the dollar index is also looking incredibly strong, you might want to think twice. So, how do the pros do it? They don't just use one, they combine them into a confluence checklist. Imagine this workflow. 1. Fundamental. You see the Fed is raising interest rates, USD should go up. Intermarket. You see gold is breaking down, confirms USD strength. Sentiment. You see most retail traders are trying to short the USD, a contrarian signal to keep buying. And technical. You wait for a pullback to a support level on TradingView. That is structured trading. That is how you turn a gamble into a business. A quick reality check. Analysis increases your probability, but it does not guarantee profit. The best analysis in the world can still be ruined by a random black swan event. Always use a stop loss. Never risk more than 1 to 2% of your account per trade. Analysis gives you the edge. Risk management keeps you in the game. Trading isn't about being a genius, it's about being disciplined with your information. Which of these 4 types of analysis do you find the hardest? Let me know in the comments, and I might just make a deep dive video on the most requested one. If this helped you see the market more clearly, hit that like button and subscribe for more professional trading guides. Plan the trade and trade the plan. I'll see you in the next one.